Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we will be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for the indices. We'll also be discussing on the stocks and sectors that we should be focusing for the day and the next few trading sessions. First up, coming to the update regarding the global markets. In trade yesterday, all the three US indices have witnessed profit booking from higher levels. However, the major trend of these indices is still bullish as they are trading above their short-term and long-term moving averages. Coming to the S&P 500, the zone of 5,230, 5,250 will act as the immediate support, while on the upside, any sustainable move above the levels of 5,330 will lead to a sharp upside rally up to the mark of 5,400, followed by 5,550. Coming to the update regarding Brent crude. So for the third consecutive trading session, Brent crude oil has ended on a negative note. Going ahead, the zone of 80.80 levels will act as the immediate support. Any sustainable move below the levels of 80 will lead to further selling pressure in Brent crude oil towards which will turn a big positive from an Indian macroeconomic perspective. Looking at the US dollar index, that is the DXY, it is consolidating between the range of 104.30 and 105.3, and only if these levels are crossed we may witness a trading move in the dollar index. Coming to Nifty, so in trade yesterday the benchmark index Nifty experienced high volatility within a narrow range of 146 points and ended the session at 22,597 with a gain of 0.31% for the day. On the daily scale, if we see, it has formed a small body bullish candle with shadows on either side. This shows indecisiveness at the current juncture. Since the last 8 trading sessions, including the special trading session held on 18th, Nifty has consistently surpassed its previous day's high, which is a bullish sign. The momentum indicators and oscillators are also reinforcing the overall bullish chart structure. The leading indicator, that is the 14-period daily RSI, is just about to cross 60. On the derivative front, if we see, May futures has gained by 0.23% and the cumulative open interest of the current, next and far series has surged by 1.09, indicating overall long built up in trade. Among the constituents of Nifty index, 14 stocks have witnessed long built up, 15 stocks have witnessed short covering rally, while 12 stocks have witnessed short built up and 9 stocks have witnessed long unwinding. If we look at the weekly series, that is, we have the expiry today for Nifty. At the current juncture, the PCR for the weekly expiry is at 1.16 and the max pain is at 22,550. While for the May month monthly series, PCR is at 1.11, which implies a buy on dip strategy at the current juncture. If we see the option chain, 22,600 has significant open interest, followed by 22,700 strike. And on the put side, it is mainly seen in 22,600, followed by 22,500 strike. So going ahead, the zone of 22,520, 22,500 will act as the immediate support for the index. As long as the index is trading above 22,500, it is likely to test the levels of 22,730 followed by 22,810 levels in the short term. Any sustainable move below the levels of 22,490 will lead to profit booking in the index, and in that case the 20-day EMA will act as the immediate support, which is currently placed at 22,378. Now coming to Bank Nifty. So yesterday we had the weekly expiry for Bank Nifty. So Bank Nifty exhibited significant volatility, trading within a range of 678 points. Although the index fell below its 50-day EMA during the session, it found support near the lower trend line of the rising channel and witnessed a sharp rebound in the final hour of trade. So it was extremely volatile in the last half an hour, especially if you see for Bank Nifty. It ended the session, that is Bank Nifty ended the session at 47,782 level with a loss of 0.55. On the daily scale, it has formed a bearish candle with a lower shadow. So for the second consecutive session, if we see, Bank Nifty has relatively underperformed the main indices. Currently, the momentum indicators and oscillators are indicating a sideways trend, and according to RSI range shift theory, the daily RSI has been oscillating between 40 and 60 range from the past 12 trading sessions. Additionally, if we see the 20-day and the 50-day EMAs have flattened over the last 3 trading sessions, indicating a possible continuation of the range bound moves in the coming few trading sessions. On the derivative data, if we see, the May futures have dipped by 0.37% and the cumulative open interest of the next FAR and the current series have dipped by 1.07%. This indicates long unwinding. If we look at the option chain, 48,000 strike has significant call open interest followed by 48,500 strike, and on the put side 47,500 has significant open interest followed by 47,000 strike. For the May monthly series, OI PCR is at 0.76. Going ahead, the zone of 47,550, 47,600 will act as the crucial support for the index. Any sustainable move below the levels of 47,550 will lead to further correction in the index up to the levels of 47,250. While on the upside, the zone of 48,100, 48,150 will act as the crucial resistance. Coming to the key market indicators, so on Wednesday, the volatility index India VIX has dipped by 1.57% and ended at 21.46. Considering the current chart structure, it is likely to continue its northward journey and test the levels of 23 followed by 24.50 in the short term. The advanced decline ratio remained relatively flat in yesterday's trading session. Presently, with the Nifty index components within the components, that is 64% stocks are trading above their 20-day EMA, making a significant increase from the 28% seen on 9th of May. This suggests a uptick in the buying interest, particularly in select counters. Key sectors which are in momentum. So among the sectorial indices, defense sector gained momentum in Wednesday's trading session, with the Nifty Pharma and Nifty Healthcare Index also witnessed a downward sloping trendline breakout on yesterday's session. This is likely to continue, that is the indices are likely to continue their positive momentum. Nifty FMCG has formed a strong base near its 20-day EMA level and witnessed a smart rebound. The sector is likely to support the Nifty index in the short term. In trade yesterday, if we see Nifty Realty, Nifty CPSA and Nifty PSC, these are likely to continue their outperformance. These are sectors which have been relatively strong over the past few sessions, and the momentum is expected to continue in the near term. Coming to the FI DI data, in the cash market, that is, FIs were once again sellers and they sold to the tune of 686 crores, while DIs bought to the tune of 961 crores. FI long short ratio for index futures is at 30.8% on a net basis. This as they sold about 7,781 index futures. On the stock futures front, FIs have sold to the tune of 53,993 contracts, while on the options front, FIs bought 87,400 call contracts and they simultaneously purchased 10,363 put option contracts. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.